There is no New Jersey exit tax. New Jersey does not charge you for leaving, and nothing is collected when you load the truck. What exists is an estimated income tax payment, and the name has done real damage because it sends people looking for a way around something that is not a tax at all. Here is what actually happens. When a non-resident sells New Jersey real property, the county will not record the deed until an estimated gross income tax payment is made. That comes from Sections 54A, 8-8 through 8-10 of the New Jersey statutes, and the Division of Taxation restated it in Technical Bulletin 57, revised in June of 2026. The amount is the greater of two figures. 10.75% of the gain reportable for federal purposes, which is simply the highest rate in the New Jersey schedule, or 2% of the consideration stated in the deed. On most ordinary sales, the 2% floor is the number that controls, because it is measured against the price rather than the profit. One correction worth making. New Jersey raised that top rate to 10.75% in January of 2020. Several pages ranking for this topic today still publish 8.97%, which has been wrong for more than 6 years. Now the part that most coverage skips entirely. Almost everyone explains how to get the money back. Far fewer explain how to avoid handing it over in the first place. Form Get REP3 carries 16 written seller assurances, and boxes 2 through 16 are available to non-residents, not just residents. If any one of them applies, no estimated payment is due at closing at all. Box 2 is the principal residence exemption, built on Internal Revenue Code Section 121. If you owned and used the home as your principal residence for 2 of the 5 years before the sale, you qualify. And the division states plainly in its instructions that checking Box 2 is valid, acceptable, and permissible even where the sale price suggests a large paper gain, because the real basis is not known at the closing table. Box 1 is the one that turns on timing. It is based on the date of closing. The bulletin gives a worked example. A seller closes in April. The deed is recorded in May, and because she was a New Jersey resident at the time of closing, Box 1 is acceptable even though the recording happened later. The closing date governs, not the recording date, and not the moving date. Selling at a loss deserves its own correction. You will read almost everywhere that a loss sale still requires the 2% payment. That is what happens by default if nobody asks for anything. What the division actually tells a loss seller to do is request a waiver on Form Get REP4 and to submit that request at least 14 days before closing. Once the deed is recorded, that route closes permanently. If the payment was made and you want it back, there are 2 paths. Form A3128 claims the refund directly once the deed is recorded, which is faster when the sale happened early in the year. Otherwise, you claim it on the New Jersey non-resident return, Form NJ 1040NR. Either way, the non-resident return still has to be filed. And now the point that dwarfs all of the above. Paying this settles one transaction. It settles nothing about whether you left. If New Jersey still regards you as domiciled there, it can tax your worldwide income for the year of the move and for every year after it. Selling the house is evidence. It is not the answer. New Jersey uses the standard tests. Domicile, with a narrow escape that requires no permanent home in the state, a permanent home elsewhere, and no more than 30 days in New Jersey. Or statutory residency, which reaches you if you keep a permanent home there and spend more than 183 days in the state. Florida changes the arithmetic in one more way. As a New Jersey resident, you received a credit for tax paid to other states. As a Florida resident, you have no resident return at all, so there is nothing for a credit to reduce. Whatever New Jersey tax survives the move is paid once, and it stays paid. So do the small thing at the closing table, and then do the large thing all year. Check which assurance fits before you assume a payment is due, and build the domicile record that the closing statement will never settle for you.